U.S. stocks climbed higher today as oil prices dropped after another spike drove prices over $100 a barrel over the weekend. The Dow closed up more than 300 points as Wall Street kept a close watch on developments at the Strait of Hormuz. So let's take a look at our interactive stock market heat map brought to you by FinViz, showing the top 500 stocks. A lot of green on the board today. Tech stocks were in the green with NVIDIA up as CEO Jensen Huang delivered his keynote on the future of AI at NVIDIA's big GTC Developers Conference. So I want to bring in Yahoo Finance senior reporter Brooke DiPalma. Brooke, the U.S. stock market had its best day since the war began. What's behind the optimism we saw on Wall Street today?
Liz, what we've been seeing is sort of this inverse effect. Every time we've seen crude oil drop, we've seen stocks move higher. And it all has to do with this optimism, this hope that the Strait of Hormuz will reopen. And what we saw, as you noted, we saw oil cross $100 per barrel. And now at the close of the market, right now, oil is sitting around, as far as crude oil goes, it fell 5%. It's now sitting around $94 per barrel. And it's really based upon this hope among investors that U.S. coalition of countries to escort ships through the Strait of Hormuz will actually happen, and that more tankers traffic will ultimately go back through the Strait of Hormuz, as that largely has been on top of investors' minds right now, and all in the background on top of not only this market being hyper-focused on oil, as now we're on week 3 of this war with Iran, but also we do have some optimism in tech as well. That NVIDIA conference, that GTC conference is underway. It's a 4-day event, and ultimately investors are excited to hear more about the AI spending boom. And on top of that, we also got reports from Reuters that Meta is laying off 20% of its workforce, and that could lead to more opportunities to spend in AI and also productivity gains as well.
Leaning back into the spending component of all this, Brooke, the national U.S. average for gas prices is up more than 60 cents from a month ago. If folks are paying more for gas, they're pulling back in other places, right? Which sectors do we expect to see less consumer spending?
The biggest sector that's going to get hit here is definitely discretionary spending. And that's going to disproportionately, the higher gas prices will disproportionately affect lower and middle income consumers as well. And when you think about discretionary, you think about goods that are nice to have, but not need to have. So that could hit apparel, that could hit sporting goods, that could ultimately hit restaurant spending, and also things like toys. And these are things that we've seen consumers pull back on over the past 3-4 years when inflation has gone higher. And on the flip side here, areas that could do well are those essential goods. So think things like food, and that could also boost stocks like, say, a Kroger or a Walmart, which has about 60% of its U.S. sales is grocery, because if that's what Americans are focusing in, that's what they're spending on, then that's where the money is going to go to. And keep in mind, with these higher gas prices, we already see about a $300 million hit to discretionary spending over the past 30 days, because that's how much more that they're paying at the pump.
Sure. Now, what are we expecting from this week's Federal Reserve meeting as far as interest rates?
Well, certainly they have a lot to weigh right now. We are expecting to hear more about, their view on this war and how exactly higher gas prices could flow through the inflation print moving forward, and how exactly they're weighing that. But as of now, many sources that I've spoken to, they do expect the Federal Reserve to hold rates steady, because there is this large uncertainty that still lingers in the air. And the word stagflation keeps popping up among so many sources that I've spoken with. This concept of higher inflation and weaker economic data that could weigh on the Federal Reserve's decision. And going into this year, we are expecting about 2 to 3 rate cuts. Now, many more of my sources are saying that we could expect around 1 rate cut. And if that does happen, it would be later on this year, all at the same time, while we're hearing a new Fed chair, Kevin Warsh, could be in as soon as May.
Brooke DiPalma, thank you so much.